Happy holidays, Merry Christmas, season's best wishes, Happy New Year, all of it rolled into one. Let's get ready for that 2025 today. Go straight into the lithium market and, by extension, other metals and minerals as well. But just a recap of some of the fundamentals and how things are looking into 2025, and then in 2025 we look at things in more detail. Okay, so first thing I'd like to quickly look at is, well, let's take that macro outlook and approach, and I've put up here a chart from IRENA looking at the demand for batteries for EVs in particular, going from around, or expected to go from around 1,000 gigawatt hours all the way up to 4,500 gigawatt hours in a pretty short space of time, as you can see on the chart. And that in turn should drive demand for lithium, demand for graphite, demand for copper, depending on battery chemistry, demand for nickel and manganese and cobalt, etc. But just using lithium as a proxy. So the macro picture looks pretty good. And whether you look at reports from Goldman Sachs or whether you look at reports from other services, I was thinking of SP Global. Yeah, it's a similar picture. Up to 2030 is a similar picture. Now, question is, what is the in-between going to look like? So we've got a healthy macro picture, and then I would like to also look at the how things are currently going. So here I'm quoting at Le Raphael from X, and very, very important document published there by him, an analysis applying the S-curve statistical shape to the current data in multiple jurisdictions around the world. Please go in and have a look at that. It's a long read and it's really worth having a read. But in terms of S-curve adoption, what he shows from his analysis is that it's a pretty good fit so far. So, and what that means is we should see a continued acceleration and uptake of EVs going into 2025, 2026, all the way through to 2030 and beyond. Also in the IRENA figures I gave you earlier, they were projections for EVs only, so not other applications like utility grid storage and other uses that may come up. Okay, so that's the kind of macro picture and expectations going forwards, how things are currently going from an S-curve adoption perspective. Okay, so keep with me. Now, if we just look at the critical minerals associated with that, so what's happening there? This nice chart from SP Global, and what I like to show here is the date is a bit. It's September 2024, so slightly out of date, but you know it gives you the picture. If you take the current average price for both the lithium hydroxide and lithium carbonate, and then you look at the cost curve and stack, you can see which of those fields are out of the money and which of those fields are in the money. So to get that equilibrium, we would expect some more production to be taken off the table or stored or whatever. And okay, we have heard about the acquisitions ongoing in the sector, about care and maintenance, about production not coming on line as early as thought. So there have been adjustments. We have heard about the Tianqi and IGO plant that's producing but not finding buyers, or had some issues with producing, and now so effectively stocking. And then you can see from this chart also, do we expect additional shut-ins to come in 2025 to balance supply demand short term into 2025 and beyond. Let's see what happens. I'm just showing the data and how things are kind of balancing out as one would expect during this phase in this particular commodity cycle. Okay. Now, if we look at this next chart, and I've been following the EV curve futurist Oz Bandit for some time, excellent articles, has his own website now where you can, a newsletter, just go up and follow, but very, very insightful analysis. And the latest one that I read, 2024, we now have reached a penetration global vehicle stock around 3%. And now 3% of the global, that is huge. From zero to that in perhaps a 10-year period. Please have a read of the article. But on the flip side, what does that tell me? Well, 97% is still to be electrified. I mean, so the addressable market, that's the point I'm making here, is huge, which means in turn the addressable market for all the materials and metals that go into the production process will continue to be in demand if the 97% additional remaining fleet is to be overall electrified in the coming decades. So moving on from there now, our aim in this sector, why are we painstakingly investing in high-risk commodities and at times non-productive companies or early production companies with exposed to this high risk? It's because with high risk comes high reward, and if you get things right, one can really generate the type of wealth that is not just the average, few percent a year from an index fund. It's very difficult to do, I agree, but I've seen it done in my portfolio, and we're going to try and continue to replicate it. So with all of the backdrop, the macro and the micro and the pricing and what I have explained briefly, we then come to the other tools that we have in our toolkit, in our bag. So one is the Lassonde curve. Now with the Lassonde curve, we can look at specific companies and specific stocks on where they are in their cycle in terms of production and the value that the market gives to that production. And secondly, we've got this other one called the mining clock. And this looks at the macro situation regarding the commodity. So what we're really trying to time in a successful investment cycle within the commodities markets, and in particular now let's take lithium, is for the Lassonde curve to coincide with that mining clock for your company. So the micro to coincide with the macro. If we can get that, even with early stage companies, you get the euphoria. Then we've got the opportunity to realize the value of our investments. With that, wish you fantastic new year. Next year, I'll be going more into lithium prices as a topic, just to see what are the expectations and projections out there, and also more in depth into other metals and minerals. Especially, I'm fond of graphite, I'm fond of manganese. Copper goes without saying, but I think the copper, that's the big one, and that's much more followed, and perhaps in a currently different stage companies and a different timeline to the let's call them the group of battery metals that we're looking at, but looking to go into more depth in all of those, and of course more companies. I've come across recently with colleagues some really good and interesting Canadian companies. Of course, we continue with looking at Australian companies, but definitely looking at companies in different jurisdictions, that North America, both US, Canada, Europe, of course. These are the areas of focus, and not to forget Africa and other places. But try not to spread too thin. Just focusing on some of these key jurisdictions that provide diversification away from China, and in some cases for China itself, because that's what the markets are demanding: localized supplies, more localized supply chains, more secure supply chains. Finally, maybe I'll just put this chart up quickly. Let's look at the Gangfeng share price. So in this case, companies cannot keep pumping forever. It's like the oil markets. Companies cannot keep pumping forever, whether you're national, whether you're private. Same with lithium. The market will bring discipline, and hence, if companies want to be profitable, then some production has to either go into stock or off the table. But companies cannot keep making operational losses by selling below cost in the lithium cost curve. Finally, Trump, and the EV market there, etc. Maybe I'll just put up one more chart quickly. This is from McKinsey, and all I can tell you is these are the key sectors of the future. Take a look at the size of the EV sector, take a look at the size of the battery sector there. These are $1 trillion worth of potential addressable market for the future. Is any country going to leave anything on the table? I don't think so. Where there's a future, where there's a declining cost curve and economies of scale, I think no country is going to back away from that sector. And I'll leave you with this. My latest purchase. This is my Christmas present to myself. I'm going to read it. It looks pretty exciting. It's had really good reviews from the author of The Chip War and also from Daniel Yergin himself. If you know about the great book, which was it's a big book, but I would say pocket reading decades ago, still is The Prize. It's got good reviews, endorsement there. I'm going to read it. I'll let you know how it goes. Happy New Year.